Very good morning, everyone. This is George Bayruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And today I will show you how investors and traders can make money on our stock market. I will show you what is hot and what is not, and what you should hold and what you should fold. So enjoy the presentation and give us some feedback if you wish. And by the way, I'm going to give you the address later on. What I'm going to show you now is the volume over the last 15 days. And you can see that most of the days were actually bearish, where you can see here in the red more declines than advances. And the volume has actually been increasing quite a bit. So in other words, volume higher with major drops. You can see here 35% of all trades ended up in declines, and 34%, 29%. And you can see from the graph here that there is no doubt there is a bearish sentiment in the market right now, so that you have to keep that in mind. Okay, the next thing here, I'm going to show you what happened over the last 2 weeks in the United States and on the commodities as well. You can see here that the Dow was nearly down 1,000 point, 3.7% over the last 2 weeks. Most of the drop was actually last week. And the same thing with the Nasdaq, and the same thing with the S&P 500. The US dollar gained some strength, and the Australian dollar also, for some reason, has also gained a little bit of strength. When it comes to commodities, we've seen that the gold price has gone up by $33 over the last 2 weeks. That is actually up 2.7%. And you can see here that silver was also up by 1.2% over the last 2 weeks. On the other hand, crude oil, that's the West Texas crude oil, was down nearly 10% last week, 14.9% over the last 2 weeks. So it's important, if you play the commodities market, it's important to know that there is a major bearish sentiment in the United States because of the US and China trade war spat. And obviously that's affecting the various prices, and the commodity, of course, have actually gone higher in terms of the hedge instrument like gold and silver. Now we look at what happened to our market, and I'm going to focus initially right in the middle here about what happened to the XJO, that is our index for the top 200 shares. It was down 59 points last week. That is nearly 1%. However, if you combine last week with the week before, the market was still up 31.6 points, or 0.5%. It tells you that with the exception of last week, the previous 2 weeks were very, very strong. Now, our market is driven by the financial and by the materials. The financials are the banks, of course, and the materials are the big companies such as BHP, Rio, Fortescue, and so on. And you can see here that last week the financials were down by 0.6%, and the materials were almost steady. But if you look at over the last 2 weeks, the financial had a very, very good 2 weeks where the market went up by 5.4%. That's following the election results, which pleased the financial sector. However, on the other hand, the problem with China and the US, we've seen a decline over the last 2 weeks of 1.2% in the materials. And you can see later on BHP and Rio have actually been the subject of that decline. Now, we've got a mechanical system that over what we see the last week and the various weeks, and we can almost predict what may happen this following week. So on Saturday morning, we've seen that the American market was very bearish. You can see here over the last 5 weeks, it's gained more and more strength in the weakness, and we ended up very bearish for the conservative trader, aggressive trader, and very aggressive trader. For the investor, we are now sitting on the sideline as neutral situation. Gold has turned very bullish last week. Crude oil has turned very bearish last week. The American dollar continues to be strong for the long term and for the very short term. And the Australian dollar started to gain a little bit of strength for the very aggressive trader who trades on a daily basis. However, for people who trade for the long term, we're still bearish. The next, I'm going to show you the graph for the American market, and what I really want to highlight, a very important indicator. On the daily chart, the one on the right hand side here, this black line is actually the 200-day moving average. All the big companies trade that 200-day moving average very seriously. When it goes above it, we are almost for a long-term bullish. When it goes down, we are for the long-term bearish. And look what happened here. For the last 3 days, actually for the last 4 days, it dropped below it. It actually dropped below it several days before. However, it really bounced very quickly upward. When it actually looked at the 100-day moving average as being support, now we can see all the candles happen to be well below the 200, below the 100, and below the 50. So that is actually a very bearish indicator that what might happen in the next few weeks, maybe the next few months. Now, when it comes to our market, we can see here that the energy was bearish. The mid-cap was bearish. Industrial and consumer staples were bearish last week for the very aggressive. However, we can see that most other indicators, despite the decline last week, we're still reasonably bullish for the short-term aggressive and very aggressive traders. But look at the material, also the same situation here. But if you look at the financial the week before, that is 2 weeks ago, we were actually bullish for the conservative trader, and we turned neutral for the financial. And for the materials, we were neutral for the conservative trader, and somehow we turned bullish last week, slightly bullish. But overall, the materials sector is actually at the moment on a neutral side for the long term. Telecommunication appears to gaining strength from strength to strength. So we are very happy with what happened to Telstra and TPG. Now, if you look at the chart for the Australian market, before Christmas, we've had a major decline, almost about 15% from 6,400 almost down to 5,400, nearly 1,000 points. But after Christmas, we recovered all the losses and we actually gone higher. Last week was a very bearish week, and you can see here over the last 2, 4, 6, 7 days, we have been on the decline. Now this middle line is the 21-day moving average, and we are really still above it. Now what happens today, we're likely to see the market going down, and that can actually affect what may happen in the next few weeks. We also heard this morning that China is going to really take the battle with the United States on the trade war more seriously, and is going to really start to put sanctions, and have already put sanctions on quite a number of commodities imported into China. Okay, now we look at the various companies on the market. Even though the financial were bearish last week, we're still reasonably bullish for ANZ, CBA, NAB, and Westpac. Of course, things can change this week, but from the performance the previous several weeks, we were actually bullish for quite some time for the banks. We will see what happens this week. Now QBE turned bearish last week, from neutral to bearish, so that's now a new position for QBE. If you want to go bearish on QBE, that will be a good time to do it. Telstra is bullish. Now we come back to BHP. BHP is neutral. It was actually bearish, gained a little bit of strength to turn it into neutral. We're not bullish on BHP. When it comes to RIA, between BHP and RIA, I think RIA is a little bit more bullish than BHP. And when it comes to Newcrest Mines, we've been bullish for the last 4 weeks. And that can actually indicate what happened to the market. So we were actually spot on Newcrest Mines. TPG, that's TPM. TPG actually still bearish, but still for the the investor, the long term, we've gone from bearish 2 weeks before to neutral last week. Okay, and you look at the daily. ANZ was bullish on Friday. CBA was bullish on Friday. Newcrest Mine was bullish on Friday. Telstra was bullish on Friday, and Worley continues to be very bearish. So if we took our advice on Worley, you would have made some money. When it comes to Suncorp, we've turned from bullish to bearish. That's a company that you can actually go bearish on. Macquarie Bank, we've been bearish for quite a number of weeks. So again, Macquarie was spot on from our prediction 5 days ago. What happened last week, on Friday, Newcrest Mine was the best performing stock, followed by CIMIC, followed by Telstra, CBA, West Farmers, BHP, and the XJO was up 4.8%. However, over the last full week, the XJO was down. Okay, so now I want to talk to you about Flight Centre. We've entered the trade on in March, on the 11th of March, and we've entered the market when it was $45.13. We were pretty excited about what was happening in terms of the special dividend that Flight Centre was to pay several weeks later. So we entered the market around here somewhere, $45.13, right in the middle, and we saw what happened after that. The market dropped quite a bit, and this period here, that was prior to the X date for the extra money, that's $2.09 special dividends. But after the payment of the dividend, the market decided, well, we've taken the money, now sell it. And then we've seen some bad news about the industry in general, about Flight Centre being subjected to a drop in tourism. And that was sometime in April. And what we did after we've entered the market, we're paying $45.12. We bought some more. We bought 120 at $45.12 and an extra 100, and we averaged our price to the average was $43.20. That was our average price. So what happened now? We've seen a drop, a major drop, and we decided to hold on to Flight Centre. And look what happened after that. The market went up and up and up and up, almost on a continuous straight line. So our average price was $42.09. The price on Friday was $43.59. That is a profit of $1.50. That is 3.6% gain over 13 weeks. That is the long term. Obviously, we've seen Flight Centre dropping from $70 all the way down to $37. Now we're about $43.59 plus the $2.09 that we've gained. So somewhere around here, which is about where we were when we entered the market, even slightly below it. Okay, further trading that we did over the several weeks in options, and if you want to see that actually we want the market to finish this week on the 6th of June, to make sure that it drops below, it stays below 6,500 and to be above the 6,200. Now if you look at the chart here, the market on Friday finished at 6,396. So we're almost 100 points below the threshold where we're going to make money if it stays below 6,500, and well above the 6,200. So somewhere in the middle, 200 points above the put and 100 points below the call. And the market is most likely will drop today, because we've got the indicators that the market will open about 30 points lower. So that's all from us here at FS Securities. This is the disclaimer. Everything we said here is for general advice only. We don't know your financial circumstances, so obviously before you take any action, please consult with us or with your professional advisor. And if you want to talk to us and you have some questions, all you have to do is write to me, george@fssecurities.com.au. And the mobile number, 0411259526, and if you're ringing from overseas, it's 61 for the Australian, for the code, the country code, and don't put the 0. Ring the number without the 0 and 61 above it. So that's all from us here. Have a good week and happy trading.